Hi, my name is Ray. Welcome to our payments-led growth series where we talk about ways software companies can make embedded payments their fastest path to growth. So today we have a topic that not many people will associate with growth, and that is compliance, specifically PCI compliance. There are a lot of assumptions and myths around PCI compliance, and we're going to do our best to bust those misconceptions. Specifically, how it relates to independent software vendors or ISVs who are integrating payments into their platform. So here to talk about that is our special guest today, Garrek Harris, Director of Platform Management here at Stax. Garrek, welcome to the show.
Hi, Ray. Thanks for having me. I'm excited to
Awesome.
dive into this.
Yeah, an exciting topic. But before we get started, I always like to know, how did you get started in payments?
Well, like a lot of things in life, I knew the right person at the right time when I was looking and got offered a job with Heartland Payments, which is now under the Global Payments umbrella. Worked there for a number of years. And then once again, knew the right person at the right time who'd been brought on to Stax as it was hitting its heavy growth mode. And they were able to pull me along with them. It's been a great opportunity and a great ride.
Yeah, yeah. Great to know the right people.
Yeah.
So always a good place to be. Right place, right time, right? So let's talk about PCI. So before we kind of dive into PCI compliance and why it's important for growth-minded SaaS companies, what does PCI even mean?
Sure. So broadly speaking, when you hear people talk about PCI compliance standards within the industry, what they're talking about is a series of requirements that have been put forth by the card brands that every merchant who wants to accept credit cards has to adhere to. And if they do not adhere to it, there are, various penalties in the event that there is some sort of negative loss, like there's a breach or, customer information is lost in some manner.
Okay, so sounds like something that anyone kind of related to payments or taking payments needs to adhere to, especially from a credit card perspective. But why does a ISV need to care about PCI compliance?
Well, the ISV needs to care about PCI compliance really from about three different directions. The first is that they need to be concerned with limiting their liability and their exposure. So if there is a breach, if there is a loss of customer data at any level, what's going to happen is that significant card brand fees are going to begin at the acquirer level and then roll down to the ISV level, which they would then have to subrogate against their merchants. And if the merchant can't pay, that's their liability and their exposure. So it's a liability not just in the dollars, but it's a liability in reputational damage. It's a liability in how that software is able to be viewed competitively within their market segment. So it's a big concern. The second primary reason that they need to be worried about PCI compliance is that there's different levels and different types of PCI compliance. So just as a merchant needs to be PCI compliant, the ISV is going to want to ensure that their software is also PCI compliant and helps to contribute towards PCI compliance for their merchants. That attitude and that directional choice allows for the conveyance of a true partnership to the different merchants that they service. It says, hey, you have to be PCI compliant. I have to be PCI compliant. This partnership is something to which we will both contribute to each other's ecosystems to maintain that compliance. And then the third way that it would matter is that, as you mentioned at the beginning, talking about it's not usually thought of as an avenue for growth. But the way that the larger players in our industry, processors specifically and acquirers, they do use PCI as an avenue for growth because it's an avenue that ensures that they're selecting merchants that are serious about their businesses. Those are merchants that are more likely to grow. They're more stable. It ensures that those merchants are put on a pathway to where they will have less liability exposure, which means lower rates of attrition. It allows for the generation of revenue in the form of of PCI types of charges. So whether that's access to an ecosystem, like I'm the director of our platforms here at Stax. One of our platforms is a PCI compliance platform, which enables people to have access to tools that will help them maintain and get PCI compliant as easily as possible and to maintain that going forward. All the way up to PCI non-compliance fees, which are used to offset liability, but are also used as a revenue generator as well.
Got it.
So that's
Yeah.
why an
So,
ISV would be concerned.
okay, that sounds like some pretty important things that you mentioned. Could you go into maybe the specifics or maybe the differences between PCI compliance for a merchant and an ISV, or maybe a better way to look at that is for an ISV or someone who would be a good partner for Stax Connect, and then maybe their customer or the merchant, like what are their responsibilities within the PCI compliance world, and how should they think about that?
So the primary principle behind PCI compliance, which will then be applied to different sets and circumstances, because an ISV will have different circumstances and considerations and variables at play than a merchant will. But the primary driving principle behind both of those parties will be, how do we protect the data transferal of consumer information? So whether that's credit cards, whether that's name and location, what we need to be concerned about is how are we protecting that? So from a merchant standpoint, most of their PCI compliance revolves around the concept of, I'm taking this transaction, perhaps I'm storing it in a CRM, perhaps, let's hope not, we're storing it on paper somewhere in the office. How are we taking that information and actioning it into a transaction that will flow through an ISV software platform? So much of their PCI compliance is about, where is their area of control, which is generally the point of the transaction and the storage of any data related to that, whether that's in a CRM, an ISV software, whatever the case may be. Now, from an ISV perspective, same principle, except they're a little further down the chain. So how am I going to manage the data, the transferal of that data? And so for them, they're concerned about, is my ecosystem locked? The only people who can access it are my customers. Everything else is, you have to be whitelisted to get in. We have secure VPN connections. My pipelines are solid and they can't be hacked, at least not easily. So that data travels smoothly and securely. Is it tokenized appropriately? How are we storing that data? Are we storing it in servers that are isolated? A lot of different pieces. It gets much more complicated the deeper that you go. For example, for an ISV, then you come down to the Stax side, and it's like, well, what do we have to do as an acquirer? And then it gets much larger. So it's really, but it's the same driving principle, Ray, for each of those situations, which is, we have an obligation to anyone who does business through our pipelines to ensure that their data is completely protected. And that'll look different, but it's the same goal.
You know, kind of like back to your point, making sure that we're all kind of focused on the primary goal of PCI compliance and how that will look different for the submerchants and the ISV. So what would you say to an ISV who asks, you know, their payments partner, and as they're looking for payments partners, and their payment partner says, you know what, you don't need to worry about PCI compliance. We have you covered. What should an ISV think when they hear that from their payments partner? And maybe what's kind of going on behind the scenes there?
Well, I think the first thing they need to say is, can I get that in writing? Because the reality is that every merchant has to worry about PCI compliance. There's not an option. It's required, and regardless of who you're processing with, how you're processing, what type of ecosystem you're in, if you experience a breach, you are liable for that. And so there's no scenario where a merchant doesn't need to worry about it. What that salesperson or company is meaning to convey, and the way that they should appropriately phrase it, is, we will not enforce you certifying as PCI compliant, and we won't make you get scans, for example, if you need it. Now, that's a more honest statement. Because what that company is doing, take for example, Stripe. So they are taking large groups of merchants and they're bundling them under a single relationship, what we would refer to as a mid. And they're funneling that traffic through one single pipeline. And because of that, they are essentially having to certify one account as being PCI compliant. It's a bit of a loophole in the rules. And it's something that only covers them. It doesn't provide any coverage for their downstream partners. So in that kind of scenario, if that merchant were to experience a breach, they're still liable. They simply were involved in a quote unquote relationship with a PayFac, which we refer to in the industry, PayFacs that can do this model as a PayFac as a service. They partnered with somebody who, number one, didn't take it seriously outside of their own protection. And number two, didn't enforce that guideline downwards, because due to the nature of their business model, they were able to essentially get away with it from the viewpoint of their sponsor bank, who wasn't going to require them to provide anything else except for certifying that one pipeline that they maintained as compliant. So as an ISV, the question, that needs to be asked there, that's why I say, see if you can get it in writing, because if they were to say that and put that in writing, they're engaging in a gross negligence and acting as an authority, telling you something that isn't true. They would accept liability for any kind of bad outcomes that would come from that, which is why typically they will not put that in writing. Or if it will be, it'll just be the initial salesperson. And then as soon as the back office gets involved, it's like, whoa. Like, yeah, let's clarify here. Like, we won't enforce it. Like, you don't have to do it, but we're not telling you that it's something that doesn't apply to you anymore. So the question that needs to be asked is, okay, well, what kind of coverage exists for me? Like, do you own a platform that would allow me to become PCI compliant? Do you own any kind of breach insurance that would apply towards the merchants that we're looking to onboard with you? Like, what is the scenario here, and what does the partnership look like that would allow me to move forward to scale my business and to maintain an ecosystem of compliance for the benefit of our consumers and for the benefit of our merchants? Because the reality is that from Stripe's standpoint, they have strict requirements on MCC, on the number of accounts, on the different volume parameters that they're willing to accept. So they're limiting their exposure and their liability with the exchange of saying, okay, well, we're only going to accept these types of merchants, which should only cost us X amount in case of a breach. But it offers a very stringent ecosystem that lacks a lot of the flexibility and also the orientation of true partnership that we at Stax like to believe that we pursue.
Yeah, I'd like to double down into the stringent aspects of it, because when I first heard the one mid and you're being, as an ISV being bundled into that, and maybe with some other ISVs or some other merchants within the same industry or MCC code, that sounds pretty limiting to me. Could you expand a little bit on what some of the constraints there could be for an ISV?
Yeah, it could be very limiting, and it's because of this business model that somebody like a Stripe, somebody like a Stax, we actually have a limited overlap in the market demographics that we're looking for, because what we try to pursue is a partnership that where we help an ISV grow, and in turn that helps us grow. So it's a true partnership that's meant to be scalable using in-house solutions, in-house softwares, from CRMs to portfolio management tools to PCI tools. And that partnership is designed to create a very solid book of business that is mature and continues maturing over the years, low attrition rates, and deep relational ties. So the difference, right, if we're looking at Stripe, their concern, and the typical concern of people in their position, is we're looking for a very high volume of accounts. We accept high percentages of turnover. And we accept that if a relationship were to grow exponentially, that it may exit the bounds of what we're looking to continue doing business with. Or if there are certain ISVs that are looking for their merchants more comprehensive solutions, like we're okay with saying, hey, that's not who we're servicing. Like we're taking a shotgun approach to a very specific segment of the market. And we believe that due to the natural turnover within that small business ecosystem and how frequently businesses are opened within those ecosystems that we're pursuing, that we're still going to be able to have very high levels of revenue. And because of our less stringent requirements as to what they have to do via software or compliance or various other regulatory measures, we're going to be able to be very competitive. And so that's their model, but it's very different than our model. And there's some ISVs, who will prefer that and some who will not. But that's kind of how those two break down, if that helps at all.
Yeah, that's very helpful. So really thinking about if you are growth minded, if you're thinking about how do I grow with payments, how do I make that a significant part of my revenue? Sounds like looking for a partner that is kind of thinking in that way too, with PCI compliance in mind, is a key question to ask.
Yeah, if you're not pursuing PCI compliance in this industry, it's because you're making a choice based on business rationale that doesn't suit your model. Now, the only models that doesn't suit are models that are far less geared towards partnership and are instead geared towards a transactional level of relationship, which is not something that we view as healthy in the long term for what we're trying to do, which is why we pursue a different model. We pursue a partnership heavy model. We bring our PCI in-house, and we then provide avenues to make it as easy as possible and to help walk people through it.
So speaking of different ways that ISV should think about partnerships, particular payment partnerships, what are some questions that maybe an ISV should be asking as they're looking for a payments partner to maybe help them with PCI compliance or to even be able to kind of assist in that way?
Sure. So I think from an ISV perspective, if I was sitting in their shoes and I'm looking at an array of options, specifically in regards to compliance, as you mentioned, what I want to know is what does that process look like? Because the majority of acquirers and the majority of even PayFacs, they will require you to become PCI compliant. The question is, how will they assist you in that process? Is it an internal platform? Is it within their ecosystem? How much control do they have? Is this something that's a throwaway because they have to do it because most sponsor banks require it? So it's just a throwaway. They put you in touch with someone. Are they treating it purely as a revenue generator? Where, to be quite frank, they'd prefer if you weren't PCI compliant because that's an additional monthly revenue for them. So to me, that's the question. The question is, how will X company pursue PCI compliance? So for us, we believe that everything is partnership. Everything is about orienting with our partners so that we can both grow together. In our mind, that's the only successful way to approach this space. So for us, we have an internal platform. We're able to control that ecosystem. We're able to work with partners to ensure that their merchants have the easiest route forward, where the right questionnaire can be selected, certain parts of it can be filled out, making it as easy as possible to be compliant. The goal is to provide value. Like, the goal is not to nickel and dime. And that is something which, is a broad spectrum of how various acquirers act throughout this industry. And so that would be my question. How are you going to assist me? And how many roadblocks and barriers are you putting in place? Because that's always the red flag. If they're putting roadblocks in place, it's because they'd much rather get the revenue from you being non-compliant than they would, assisting you towards a more holistically secure ecosystem.
Yeah, those are great points. So back to the kind of bad parts of or the reasons why a PCI compliance needs to even exist in the event of a breach. Does a responsibility fall on the ISV or on the PayFac or the submerchant? Like, where does this kind of fall in the realm of responsibility?
It's a fun game of rolling downhill. Got to be careful with our language, but that analogy is going to hold for this situation. So the card brands are going to levy those fees to the highest level available first. So those are going to come in at the processor level. The processor, assuming that there's an acquirer involved and they aren't acting as the acquirer, so they're going to roll those fees down to the acquirer. The acquirer, assuming that there is a PayFac or an ISO or an ISV involved, they're going to roll those fees to the let's just call it ISV level. And then that ISV will then have to subrogate that against the merchant. They're going to try and roll it down to the merchant. The issue is that about 60% of small businesses, these fees average about $35,000. So about 60% of small businesses have to declare bankruptcy. Many of those just close their doors. So this started picking up steam in the industry because for a large portion of ISVs, of ISOs, of PayFacs, and acquirers, they service small businesses, brick and mortar locations, or places that have e-commerce setups that are using like an integrated software, but they're not massive shops. And so as they would experience these losses, they would have to declare bankruptcy. Some of those fees would get paid, the vast majority would not. And then the ISV or the acquirer, whichever the selling institute was that's closest to the level of that merchant, then has to pay those fees. So that created an incentive, especially on the part of sponsor banks, to say, hey, we can't have this liability.
Yeah, sounds like a really game-changing, life-changing, consequences. When you think about it that way. So really, again, just kind of stressing the importance of why we have to do it this way, right? And why we have to try to protect that that information. And ultimately, I think it's out of a good nature, really trying to make sure that the consumer's data is protected, that they're not getting hacked, or they're not part of any scams or anything like that. But there are some major consequences there when you're talking about $35,000 for a small business, right? So
the 35,000 that doesn't go on a payment plan. Like it's like, this is needed today. Like, for example, some of those fees are you have to purchase a new debit card. At last time I checked, it was $5 a debit card. That was pre-COVID, so let's call it higher now. But you have to purchase a new debit card for every single customer that walked through your doors during the established window where this breach took place, which is normally about a month. So these aren't things that can just be put off, and which is what drives a lot of small businesses, unfortunately, into bankruptcy.
Yeah. So those are some very important points. And as an ISV that's thinking about, how do you continue to grow? How do you get more customers? Those are going to be your customers, these small businesses. And so, being able to not only say, but actually do the work of PCI compliance for them, I think is an important thing to have as not only building trust, right, but actually just kind of doing the right thing, and also just like something that you can even be proud of doing, right?
Yeah, like it's one of those weird times where there's a nice confluence here between the moral and ethical action and like what's actually quite good for your business. Like it's there doesn't have to be let's take the win when we can get it. There doesn't have to be a disconnect here where it's like, oh, that's the right thing to do, that's really going to cost me. It's like, no, this actually contributes if you are able to partner with a company that views it as a partnership and views it as a pathway to assist and to help in getting compliant, rather than a pure revenue generator.
That's right. Yeah. So those are great points. Garrek, any other final tips or any other maybe final words of wisdom for our high growth ISVs that are looking to continue to grow? how should they think about PCI compliance? What are your final words to our audience?
I'll never claim to have any good words of wisdom, but I think that from the standpoint of a high growth ISV, a differentiator in our space at any level throughout, whether you're an ISV, whether you're an acquirer, whether you're a PayFac, anything, whether you're a processor. There are companies in this space that view their relationship with merchants and consumers as a partnership. And there are companies in the space which are about chasing the absolute bottom dollar and viewing it more as a completely transactional relationship. When you're a high growth ISV and you're dependent on customer relations, you're not just selling a pipeline, you're selling a software, you're selling a solution, you're pitching your services as something that will partner with this client to help them grow. And then you're hopefully looking for an acquirer or a PayFac that will do the same with you as a partnership. PCI becomes something that has to be talked about and treated realistically, because it's something which will begin to affect your book of business. It will affect your attrition. It will affect the strength of the clientele that's coming in. It will affect your relationship with sponsor banks, and it'll affect your relationship with the organizations like a PayFac, like an acquirer, that are having to accept liability based on how you're running your book. And so it's something that it's the right thing to do in the industry because it is regulated, but it's also something that puts your best foot forward as establishing yourself as a partner. And it makes you very attractive to acquirers who are looking for somebody that they can partner with, because there's already a meeting of the minds that we like to be compliant. We take seriously our obligation to the consumer, and we're focused on future growth in a holistic ecosystem, not just a transactional relationship.
Thank you, Garrek. That was many wise words, if I do say so myself.
I'm going to tell my wife. She won't believe it, but I'll let her know.
Well, thank you so much for sharing and educating us on PCI compliance. I certainly learned a bunch, and I hope this was valuable to you, our audience, as well. Garrek, if anybody wants to reach out to you, if they have any questions, what's the best way to reach out to you?
Best way is to try and reach out via email. My email is garrek.harris@staxpayments.com. So that's Garrek, Garrek .Harris, HARRIS @staxpayments.com. You can also find me on LinkedIn. I'm not as active there, but give it a shot. We'll see if we can get to it.
Again, thank you so much. Thank you for joining us for this installment of the Payments-Led Growth series. We hope that the insights shared today will serve as a valuable compass as you chart your course through the realm of embedded payments as the fastest path to growth. If you found this episode helpful, don't forget to subscribe for more expert discussions and stay tuned for our upcoming episodes. Until next time, may you continue to grow in your payments revenue. Take care.